What's up? What's up? What's up, guys? How are y'all doing? What's up, guys? Let me just do an announcement on my Discord. 2 seconds. Just do a little announcement and then we should be good to go. Where's my announcement tab? I don't even find it. What the hell? Bro. Okay. Okay, so this is gonna be a backtesting session. I'm gonna be giving away two 50K select accounts. And the only way I give those accounts away is if we have 80 likes. All right. So of course, in the beginning, we're not gonna have too many people. You know, it's hard to join a stream to do backtesting on a Monday night. You know, maybe you partied this weekend and you need some sleep tonight. So the real grinders are here, though. You know. So let me just do that announcement, and we should be good to go. So just make sure to like the stream, subscribe to the channel to enter the giveaway. Okay, I'm gonna be giving away two 50K select accounts, or the account of your choice. Basically, if you prefer growth, I'll give you a growth account. If you prefer a select account, I'll give you a select. I think you guys prefer growth, if I'm not mistaken. But yeah. So how are y'all doing today? To be honest, today I did not take any trades on my 5 lightning accounts. I was not really looking at the chart because there was no news, and the first hourly candle did not give me a good story. So I was eyeing some opportunities, but nothing really clear for me. Very slow day, no kind of volume at all. It was a really low volume day, so you know, um, we're gonna have hopefully a better day tomorrow with the news. So we'll see. Yeah, growth is the daily 1 day to pass. All right, guys. So again, just like the other sessions, this is what I like to do now. I like to just do a little bit more practice and show you guys my thought process behind trades, my view of the market, how I basically look at things in real time. So, do you guys want to choose a certain date or a certain period in time where you guys want me to back this? Let's say if you guys want me to back this 2024, 2023, anything that you guys really want, I'll just create a new session here just so we have like fresh, um, absolutely fresh backtesting data, and we're gonna start like this. Basically, what I'm gonna do in this session is that I'm gonna take two of the strategies that you actually love, and I'm gonna be backtesting it, basically taking notes, journaling some sort, journaling the trades in some sorts, basically, seeing, all right, I am approaching the strategy that way. Is it working? Is it not working? What am I supposed to do if it's not working? And just seeing all the thought process. Okay, so basically, let's do a poll in the chat. Type one if you want me to backtest like the ICT power of three, okay, which is usually a concept that I show. Uh, Two, do you want me to backtest the orb or any sorts of breakout strategies? And three, do you want me to backtest? I don't know. What can I backtest? And literally just type um, three, just type the strategy of your choice. Okay. All right. One, two orb. The time frame I would use on the orb would be the 1 minute. You like, I wouldn't wait for the breakout though. That's how I would do it. I would target the orb basically. That's what I would do, in a sense. Because like I think if you just wait for price to break and then retest, I think there is some good opportunities to go grab that high or grab that low before he breaks out. Basically, just target it. What do you guys think? Micro scalping. Now we can't do that, bro. Bro, try to set me up. Um, one. It's pretty like it's pretty mixed. Cause I know we have some ICT haters in the chat, and that's definitely normal. But we're gonna create a new session. What year do you guys want me to do? Literally, just type a year. Um, just type a year, and I'll do ES and NQ. All right, because ES and NQ is just by far the best. 2024. I think last time we did like January 2024. So what we're gonna do is that we're gonna do like we're gonna do we could do February 2024. The thing is with the fib and the golden pocket, let's say it's pretty subjective. That's the only thing I kind of don't like about backtesting the strategy. It's like pretty hard to make rules for that kind of strategy. You know what I'm saying? It's like which high are you taking? Um, we could like build up a strategy from it though. Like we could do that for sure. I'll do this, create a session. All right, so I'll split the screen in two. I'll have ES's chart. Let's say I have ES's chart to the left and NQ's chart to the right. All right, so I go to the next day open and let's start the backtesting session like this. I'm in February 2024, which is price action we never did. I don't know what's gonna happen. So what we're gonna do, we're gonna try to backtest the orb on the first trade and then the power of 3 on the second trade. So basically we're gonna force ourselves to take a trade from 9:30 to 11. That's basically my approach. I want to take that approach in 2026. You know, I think trading the whole day it's really good because you're not forcing yourself to trade in a certain time window, but also the more you expose yourself to a basically the bigger the time window, the more manipulation there could be, the more randomness there could be to price action because you don't know if there's going to be any liquidity or any volatility in the PM session. So let's see what we can do here. All right. So what am I seeing right there is that ES is absolutely bullish while NQ is absolutely bearish on the first play. Is that a good thing? I don't know. But right now we are printing a big bullish candle on the 15-minute chart here on ES. So, and on NQ, it is looking pretty much bearish. Okay, so this is a pretty big divergence in this market. So I wouldn't want to anticipate anything right now. Let's wait. All right, bullish candle on ES, and then ES wipes out the draw. Okay, not really a way I could have entered on that play, to be honest. If you play like the break and retest, which I don't necessarily like, let's see what happens. Yeah, you would have gotten absolutely destroyed. Like in this play, I think if you play the orb, well, let's say you try to target the high or the low of the orb, like prediction wise, you need to look at ES and NQ, both, because if there's a divergence, it will lead to some sort of moves in the opposite direction. Let's say here, this was the high of this was the high basically of the opening range. So this was the high, this was the low, and you see as soon as we swept the high, went back down, and NQ went to hit the range low here. So that's definitely something I would do. Right now, let's go on NQ and let's look at how this hourly candle is going to close, and we're going to use it in our favor to look for potential shorts. All right, so here, what am I seeing? On this hourly chart, we're closing below liquidity pools. We're sweeping the previous candle's high, closing below the previous candle's low here. Aggressiveness from the sellers. So now I favor sellers, okay? I favor the sell side, and I wouldn't want to predict that this candle will reverse and close back inside the range bullish. This is what I'm not willing to do. I do not want to fade this initial candle from 9 to 10. I think it's giving us a pretty good bias for the silver bullet hour. So I would basically be bearish for that whole hour. Okay, so I will treat every single bullish market structure shift as being fake outs, and then once that market structure shift gets squeezed, I will then short back down towards the range low to grab a 1-to-1. This is basically going to be the approach for the power of three. We could also look for opportunities on ES or some sort of divergence, but basically what I'm going to be looking at in this session, hourly candle from 9 to 10 closes bearish. I am leaning bearish. I want to see lows being taken out because the biggest participants in the market are positioned short. Okay, I don't want to fade them. All right. Basically, why am I doing this? It's because usually this candle only reverses about 35-40% of the time. Okay, let's say if the 9 a.m. candle closes bearish, this 10 to 11, if it flips back above the open and closes as a reversal candle, it only happens like 35-40% of the time. So this is why I would remain bearish on that one. So let's do the let's go on the 1-minute chart and let's wait for fake outs. So here we market structure shift. We create that market structure shift on the 1-minute chart. Perfect. We tapped into this 15-minute bearish for value gap. This is exactly what I want to see. I want to use those 1-minute shifts as being fake outs. I know a lot of people are just buying those shifts on the 1-minute blindly without any frameworks, and I know those people are not profitable at all. So what I'm gonna do, this is a gap, this is where my buyers are located. If we squeeze that gap, I'll go short and look for the bottom of that range. Even if it doesn't work out on there, I will basically hold the same framework throughout this whole backtesting session. So here, holding, now we're pushing down aggressively. Was there a potential way I could have caught that? Not necessarily. Now my only job is to wait for a pullback. So now let's sell one here. I will have my stop loss being right there, and I will put my take profit at a 1-to-1 risk reward back down to see the range low here. Hopefully we're gonna get picked up on that one. I don't know if we're gonna pull back all the way to the inverse, which would be really good. I think, right here, what do you guys think? I would say probability wise, I do not see a pullback deeper than this, deeper than 22 because of that breaker. We could definitely, the best possible thing that could happen is that we pull back towards 29, which is the inverse. I don't think it's gonna happen, but let's wait. Okay, unfortunately, this was not kind of a play that was really takeable, I would say. You could have taken that on the 30-second though, but there's going to be fake outs on that one, so let's just now count it. Let's keep going. But you see here, price is going down. A lot of ICT traders, or a lot of traders in general, will take that first market structure shift and will expect that price will drive back higher and create a hold reversal back to 50% of the range just because we shifted on the 1-minute chart. All right. What I do not want to see though is basically, even if this market structure shift ends up holding and goes back to 50%, it only happens 35-40% of the time. This is what I'm saying. This is basically the framework behind that system. So now if you were a long participant, let's say inside this range, if you were a long participant inside this market structure shift on the one, when would you be shitting your pants? Exactly here, inside this gap. If price starts closing below this gap and starts squeezing you and your stop loss is right here, take profit is at a 1-to-2, let's say, at this exact moment, you don't want to be in the trade anymore. You are looking to cover, you're looking to potentially have an SMT here to save you to see price go back to the upside. All right. So this is basically what I like to do, is long when short participants are being squeezed, or short when long participants are being squeezed. So let's say here, let's keep going. This wouldn't really be a good scenario anymore, but you could still count it in a sense. I think entering right now would be forcing a trade, but I think entering right now would be forcing a trade, 100%. But still, I'm favoring shorts. I want to see this range low being taken out. I think right now it's not necessarily a really good trade because of the timing, but let's see. Right, yeah. Our hourly chop. Let's just go to the next day open and let's try to find a trade. Uh, we're gonna try to find the orb trade first. So this is 41, 42, 43. Candle is pointing to the downside. ES is way more aggressive than NQ. I'm favoring shorts right now. Literally, shorts on NQ do not look bad, I would say. For the opening range breakout, basically you're predicting that price will sell off and shoot for the range low because this is what you formed at last. So let's say here, we put our stop loss right there, take profit right here. Orb trade here, let's see. Okay. If ES takes out this low, I'm going to be out. Okay, so ES just took out that low. You know, the risk reward is not perfect here. I'll trim 75. I know we're possibly going to see a bounce from there, but let's let it ride for that full 1-to-1. Yeah, you see how bouncy it is at this exact timing. It's pretty crazy. All right. So the reason why I took this trade basically was purely based on structure and timing. So let's say we formed the range high of the opening range. We pulled back down, we shifted, and then we create the range low here. And right now I know it's going to close in around like 1 minute. So we broke structure to the downside. We are reacting with a down close candle from this bearish gap. I know that we have more chances of seeing lows than breaking highs. Okay, timing wise and structure wise. So let's say a good play would be to wait, basically to predict that the range low will be taken out on this opening range play. Okay, instead of just, I see a lot of people just waiting for breakouts, full breakouts, and the thing is with that is that the risk to reward is pretty poor, and there's a lot of fake outs. But we're gonna see here on this next hour, we're gonna treat the 9 to 10 a.m. candle as our bias basically for the day. So here, let's see, this hourly candle closed bullish. All right, we're ripping above. What is that? Let me see on the daily chart. Okay, this is all-time highs. All right. Okay, I'm definitely not shorting the market. Okay, so we're ripping above all-time highs. This hourly candle closed bullish, even if it wicked back above. It wicked back down and couldn't close above the previous candle's high. We closed above the open. Failure swing. We're far away from that 80 here, which is the high. So right now, if this candle ends up going back down and create some sort of shifts, basically, let's say shifts right here, I would judge that this shift is a fake out, and once those sellers are being squeezed, I will long that, take profit right here, stop loss right here. Okay, that's what I'm gonna do. So let's go on the 1. All right, buddy. Okay. Pretty hard trade here. Okay, this is pretty much gonna be okay. I don't hate that one, I won't lie. We pulled back towards a 5-minute gap. We held it pretty aggressively. Those wicks are telling me that we are wicking this fair value gap. We're closing back inside the range of it. We have the range high here. We created some sort of order blocks back to the downside. We're squeezing it, high, low, lower high, lower low. Okay, now we're squeezing it. We're forming bullish structure, closing above the opening price of the series of down close candles that created the sweep. I could potentially see a long opportunity back to the range high here on a pullback. This is pretty risky, I would say, but let's see if I can grab something here. I would have my stop right there. That's the thing, it's like the take profit does not really make sense. I will wait for a deeper pullback, let's say right there. 380, 380. This is not bad. What do you guys think about that trade? Type 1 if you think that's a good trade. Type 2 if you think it's absolutely horrible and it's S. But I think it's a pretty good trade, respecting the overall framework. The only thing I hate is the fact that this 15-minute candle ends up being a reversal. So we have an unfilled fair value gap right below us. So we could basically get faked out on longs and see this 15-minute gap get tapped into before we hit the target. So this is like something to keep in mind. And let's say the 65 level will be huge. So like literally, we're gonna enter in it. But we're gonna enter this long. Okay, we get tapped into it. Nice push right there. If we sweep this high, this is the moment I'll go break even. Boom. All right. Literally like a take profit being tickled right there. So right here, nice breakout. And yeah, I took out most of my profits right here. Okay, so okay, why did I take this trade? Perfect. This is literally all the thing that you need is why. Okay, why then when? Okay, why did I take this trade? Okay, I have one framework, and it's to treat the 9 to 10 a.m. candle as my bias. Okay, if basically my bias and my thesis on the market is that the biggest participants in the market are positioning themselves in the first 30 minutes. Okay, usually, so basically that hourly candle will give you a pretty good story. So let's say the 9 to 10 a.m. candle closes bullish. Okay, I am not trying to fade them because reversals only happen, let's say, below 40%. Okay, so if I know this information, let's say, and I can calculate that with backtesting, and I know price doesn't reverse too much, there is going to be market conditions where price will reverse like 60% of the time, and this is the moment where you will need to survive rather than make money, or you will need to adapt your strategy rather than just staying static and letting those losses come back to back, which is, in a sense, trading is hard because of that concept of being able to adapt yourself to market conditions. But you need to do what you need to do, all right, to be profitable. So this is the reason why I took this trade. Why did I take this trade? We created some sort of breaks of structures to the downside. I am bullish because that 9 to 10 a.m. candle closed bullish. We're ripping above all-time highs, so I will treat every shift in market structure, every bearish, um, structure breaks as fake outs, as areas to just generate sellers. And then once we start squeezing those participants, and I'm asking myself, all right, if I was a seller inside this range and price is currently here, am I shitting my pants? Yes. So then I'll go long and just aim for a quick squeeze, aim for those sellers to step in and those buyers to cover their positions. Okay, this is basically, again, the same exact framework I'm doing in a lot of those sessions. And it could be different. Let's say, basically, look at that. All right, you just take an hourly candle from 10 to 11 and look at how many bullish, let's say the 9 to 10 a.m. candle closes bullish. All right, just take that into consideration. 9 to 10 a.m. candle on the hourly closes bullish. Then on an hourly candle, there is 4 15-minute candles. All right, let's be honest. On an hourly candle, there is 4 15-minute candles. And what I want to say with that is that if there is an hourly candle from 9 to 10, there will most likely be at least 1 or 2 candles on that 15-minute chart that will print bullish. Okay, at least most of the time. And those are basically the handles that you can capitalize on in most days. Those bullish 15-minute, you don't need to predict an hourly candle. You only need to predict a 5-minute distribution or a 15-minute distribution inside a range. So let's say here, this hourly candle from 9 to 10 closed bullish. All right, let me go to the 15. How many bullish candles were there inside this range, inside this hourly, basically? Okay, there was 1, 2, and even when this candle was bearish, I predicted one singular bullish 5-minute candle distribution back to the upside here, and I caught the piece of the pie, which is good. All right, so you see here, candle closed above the previous candle's high, really good. Let's go to the next day open. Let's wait for the orb trade first, and then let's do the power of 3 like I always do. All right, so let me go on this 1-minute chart. Oh shit. All right, so this is the 1 minute on NQ. This is the 1 minute on ES. All right, I think this is a better angle. You guys can see my face more. All right, so right here we're breaking lows we are going to form the low of that opening range at last. So here it's 43. We form the low here. That 15-minute candle is closing bearish. So I have two things I can do. It's either I predict that I sell right here because we're closer to that low than that high. So if we're reacting to that bearish or value gap and we're breaking structure to the downside, scalping wise, it makes way more sense, and timing wise, it makes way more sense to sell that 15-minute candle and predict that the lows of that opening range will be taken out than this high. Okay, the question is, how deep is the retracement going to be? And the second question is, if I wait, would it be better to wait and capitalize on a squeeze of those sellers to then go back long for that range high, which is also, let's say, being extremely patient on that kind of play. So let's say here, I would say, like, structure wise, it makes more sense for me to sell right now. So I'll take a sell here, put the stop loss right there, take profit at a 1-to-1. That's basically what I'm going to do here. I'll put at 370-ish right there. So let's see. So we're picked up here. So basically what we're doing structure-wise, we're predicting that the orb will take the range low. Okay, because of how this 15-minute candle closed. Okay, so let's see. Reaction from that gap. And we're absolutely being squeezed, fortunately, which is exactly the second scenario I talked about. We went for the prediction of the sell. Buyers defended their position. This is a really good long back towards the opening range high. But we got squeezed on that. But we basically made money on two trades predicting. Okay, is the prediction better or like worse than waiting for the second? Let's say waiting for the fake out. Only the data will tell us. But I have literally no data on the orb, so I'm trading it exactly with y'all. So here, let's see how that NQ's hourly chart closed. Okay, you see here, the hourly chart closed, hourly candle closed bullish from 9 to 10. That's good. So that tells me the bias for the 10 to 11 a.m. 1 hour candle. So basically, I am predicting that since this candle closed bullish, we have more chances of seeing the next candle close bullish than reversing and closing back inside the range bearish to form a reversal candle. Okay, that's basically my thesis. So here I'll go to the 1 minute chart and I'll treat every bearish market structure shift as being a fake out. And when this market structure shift is starting to get squeezed, I'll go long to snipe the range high, which is exactly what's happening right here. So right now, you guys see in that sense, we never truly shifted, I would say, but we closed below the series of down close candles before the sweep right here. And then those sellers are not seeing any sorts of profits right there. So we're breaking structure here. So the play would be to see a pullback towards that order block, stop loss right here, take profit at a 1-to-1. Okay, this would be the play. So let's see here. How can I play it? I could wait for a small retracement back towards the OB here. That wouldn't be bad. And yeah, I'll go for like a wider stop, wider take profit. Let's do this. Let me see how much likes we have. How many likes we have? We have 27. Yo, I need 80 likes to do the 250k select account giveaway. Come on, guys. I know it's Monday. I know Backtesting is like, yeah. I'll lock in, guys. Come on. 250k selects or literally a 50k growth if you want. Okay. So let's try this long here. So we're picked up exactly right here. Boom. We took out the range high, which is exactly what I wanted to see. So like right here, I either go break even or take some super small profits to just secure something. Let's say I was with micros. I think this was like this was not too good of a trade. I'm not gonna lie, but let's say this was the trade in general. All right. So basically, what happened? Same thing. I treated the hourly candle from 9 to 10 as a bias tool Then we created that shift where most ICT traders, where most people will sell their positions. That initial market structure shift is literally like you need to fade it in a sense. Even if like price will create new lows from it, you don't care because this only happens 35, 40, sometimes 45, okay? But you don't want to fade or reverse the market at all times, okay? Which is exactly what I did here. Not the perfect trade, let's say, but I was able to have a read, and I was able to get 12 points out of the NQ's market on February 8th, 2024, okay? Which is exactly what I want, okay? And here the market is reversing back. Let's see. Even here is not a bad long opportunity again. You see, like I'm treating those moves, those shifts in market structure as being fake outs. Okay, basically what we can do here, just look at exactly what happened. Okay, I just went back, but basically look, this candle, if you grab the statistics of this candle closing bullish and the next one closing exactly in that way, it's not too high. Good. If I know this is what I'm basing all my trades off of. But let's say here that candle flips back below the open. That tells you a big story. That tells you that this is actually a market structure shift, all right? And sellers are stepping in. If this candle is most likely going to close bullish, it needs to do this before to create the downwick of a future bullish candle. It needs to go from being bearish, okay, to form the downwick of that future bullish candle, to then flip back above its opening price and look bullish and basically form a pretty big downwick. Okay, so let's say the candle will look bullish right after. So let's say here. Okay, so look at exactly what's going to happen here on the one. Okay, we pulled back, which is exactly what you want to see. You don't want to sell this. You want to look for continuations based on that down move. So you see here, holds that down move, pulls back, goes extremely deep. A lot of people are going to sell this, okay, or are going to be greedy. But look at what's going to happen. Look at what I actually want to see. I want to see this downwick being formed. And since I favor continuations, I want to see us trade back above the open of that candle on the hourly. Boom. Once it flips back, I know we have more chances of seeing that high than that low at this exact moment. You see? That's basically how I would manage my trades at all times. But it will not be as clean as that every time. Let's say it will not necessarily go from being bullish to bearish and then flip back bullish again. Okay? But one main takeaway though is that a lot of people just predict. A lot of people just predict when, you know, if you go for a 1-to-1, let's say you're just reacting rather than predicting. If you get a small piece of the pie, it's way easier to scalp 15 handles than 100 in a day. All right, way easier. So let's say here, of course, the candle, let's say this was the 9 a.m. What happened in like the last 2 or 3 scenarios is that this candle was fluctuating. It was pushing back to the upside. It was not flipping back down below the open, all right, and looking bearish. Sometimes what will happen is that this candle will be too strong, the 10 to 11. So you will judge that the pullbacks will just be, basically the shifts will only be pullbacks to fuel that up move. Okay, so the candle will do this. It will push, it will create a high, then it will wick back down. All right, it will wick back down right here, which is where you will shift on the 1. And then once it grabs liquidity and then starts to disrespect those bearish PD arrays and start trading back, and that upwick is getting smaller and smaller, it's where you long back up. You see? Which is another way basically to trade that exact framework, okay? And it's not going to work at all times, okay? You see here, this is exactly, in my opinion, an A+ setup. You know, I trust, like if I had to take the trade, I would long that trade 10 times out of 10, and I would not short this bearish market structure shift. Why? Because of this, because of the strongness of the open. You see? it's crazy, but you see exactly what happened inside this range, and I can show it to you. This candle flipped back bearish. People sell this. A lot of people's models is selling below the open of a new H1 candle, predicting that this candle will be bearish. What I'm telling y'all is that a lot of the times when I was looking to trade that bearish candle, that reversal candle, it would flip back up. And I would always see those moves go back in front of me, back to back. And I was like, why am I not catching those longs? Actually, like, they're literally freer. Like, they're literally so free. You know? It's pretty insane. And this is what I'm telling y'all. It's like, sometimes continuations are way better than reversals, even if they're not the best risk to reward trades. Right? Way more consistent in a sense. So here you shift bearish, fake out. Once you flip back bullish, long, range high. Exactly here, and this would have been a really good long opportunity. So now let's go to the next day open and let's do the same exact thing. Type 1 if you like the strategy. Type 2 if you think it's too complicated for you and you rather like trade something like the orb. Because I think, let's say, it's not necessarily for everyone, but I don't think it's complicated at all. It's really not complicated. It's really just you fade bearish shifts on the one. If the candle closed bullish or the bearish, you know? But there's multiple frameworks, you know, that you can trade, not necessarily just that. There's, you know, I could show some other frameworks to y'all if you're down, if you guys are down, but it's not, let's say, a play that I would take on a silver bullet timing. Silver bullet meaning like from 10 to 11 a.m. Okay, so right here, first hourly candle closed bullish and as a reversal. We're back below the open. Look, this candle looks bearish. It is a reversal candle. Okay, let me just go ahead and do this. It is a reversal candle right now on the hourly. Wait, let me go here on NQ. I never tried it on ES actually. I don't know if it's better on ES. Like, you guys would be surprised on how much ES's price action is good in the AM session. That's pretty good, I'm not gonna lie, especially for those kind of moves. So right now, this hourly candle closed bullish above its opening price, basically reversing the previous candle. So now the new candle is looking bearish. So basically right now, I'm predicting that the next candle will be bullish, okay? Or I'm predicting that there will be 15-minute candles inside this range because of the strongness of the open that will close bullish. And I will try to capitalize on those bullish candles by looking at fake outs, okay? So bearish market structure shifts, bearish order blocks being created, and them being absolutely squeezed to see the range high. So let's see here what is going to happen. Right now, new candle opened up, goes below the open. This is exactly the moment where I want to look for longs. Okay, so let's look at what's gonna happen. Goes back down, creates a bearish order block. Okay, if we shift back above, this is a good long opportunity. All right, this is a pretty good long opportunity, I'm not gonna lie. All right, really good long opportunity right there, exactly. So here, what's happening? We created a bearish order block. High, low, lower high, lower low. We're basically not holding this bearish order block. I looked at the 9 to 10 a.m. candle to tell me the bias, and right now the bias is bullish. All right, it is bullish, so I will treat all those those breaks of structures to the downside as being fake outs, and just the creation of the downwick of a future bullish candle, either on the 15-minute or on the hourly. Okay, so let's see here. I'm getting tapped in here. Okay, really nice move back to the upside. Definitely a moment where I will look to trim some profits. Again, worked out in my favor. Again, Really clean trade. Let's take out some profits right here. Okay, let's let the rest ride all the way to that high, because I really like this high data high, a high formed by, let's say, a news movement. So let's see. Nice. Again, back to back to back, literally back to back to back. Really clean. How much are we up? Closed position. We took 1, 2, 3, 4 winners, 1 loss. Wait, 1, 2, 3, 4. Yeah, 4 and 1 right now. Really good. Really good price action that we're seeing. What did I do again? Looked at the 9 a.m. candle that closes at 10. So 9:59 and 59 seconds. If it closes above the open and this candle ends up being a bullish candle, the next candle will open up right here, and I will judge that every shift in market structure is just a fake out, and once this fake out gets squeezed, I'm in longs for the range high. As simple as that. Literally as simple as that. And it's been 3 back-to-back days that I caught the same exact long opportunity. Literally. Let's see here. 44 likes. Damn. People are dead or what? Let me see. Let me see on Twitter if the post was made. All right. What time is it? It's 44. Okay, we still have 15 minutes left. That's not bad. Yeah, that's holiday volume for real. Used to be more people in that session also. All right, let me like 2 seconds. This is genius, bro, and effective. Good work. Appreciate you, bro. But there's so many frameworks to find like those, not just this one. Like I basically what you need to focus on, in my opinion, when you're trying to build a system is how replicable your trade could be in the long run. Okay? A good system is not necessarily a system that is really hard. It's a system that you can basically replicate back to back, and find the weakness in the system so you could add rules in order to make it better and in order to reduce the frequency and increase the win rate. That's literally it. It's not, you don't need to be a genius. Of course, it's hard to find it in the first place, I would say, because not everything works all the time. But in a sense, like, there is a lot of adaptation to do. So, you don't necessarily just trade it in a static way. You could switch up your approach a little bit, wait for deeper retracements. Let's say there is market conditions that you're using the same exact strategy. Okay, let's say there's market conditions where, let's say, the first candle will close bullish, and then you're gonna see this in, let's say it's 2026. New candle opens up, drives up higher. First market structure shifts, gets created. All right. Then what's going to happen is that you're going to see that when you start breaking back to the upside and you want to long that high, that right here in 2026 for some reason is so strong that it's creating new lows right there, sweeps it perfectly, and then goes back up. This is basically like your strategy being front run. In a sense, you're getting stopped before price is going higher. What are you going to do in that way? Basically, there's two ways there. This is when the adaptation of a strategy is so important, is because price is not always going to act the same way in every market condition. And this is really where you're going to find a lot of people not willing to trade anymore or just stop trading overall. It's because of when you need to adapt your strategy, it's really hard to accept it, and it's hard to find the right conditions to put in your new system, in a case, in some sense, basically. So let's say I see this. I see that every time price shifts below, okay, and then we're getting the squeeze. Instead of just entering right here like I used to do, okay, or basically what's usually going to happen is that you're going to break pretty strongly and you need basically to enter here market or pretty high inside this range. What you can do to adapt your entry is to wait for a deeper pullback. Throw some fibs out. Throw some fibs, basically force your trade to pull back to 50% of the previous range and adapt your entry. Enter right here back at 50% of the range, have a wider stop, wider take profit, so you know that even if price comes back for that second sweep, you are covered. Okay? This right here, what I just explained, is the beauty of trading. It's being able to read what the current market conditions are telling you, not necessarily what 2012 is telling you. What 2025, the end of 2025 is telling you what happened in the last 3 weeks, 4 weeks, 6 weeks, last quarter. And when you know that, basically your strategy, basically what's going to happen is that it's either you have the skill, but you're losing right now because your entry is not working well. Okay, you're getting stopped before price is going to your target. Or second thing, you're losing because your system just does not work. Okay, and when your system does not work, it is not an entry problem. It is a framework problem. It is the way that you frame your trade that is a problem. It is the overall context behind why you take it that is absolutely horrible, that you need to switch. Maybe you lose some edge in a year, or maybe you know the way that you framed your trades back in 2018 is not working now. So this is why it's really important to always be a student of the game in a way. Even if right now I have 4 plays in my playbook, I am working still, guys. I swear to God, I am working every single day to build new models and to have some sort of backup models in some case where price will just be so weird that I can't adjust, and instead of being scared and biting your fingers, what you can do is just work. It's just to find something else, go back to the drawing board and just work, put your head down. That's what I'm doing. And I know that it's not necessarily because I'm going to lose my edge in a way. I know that sometimes I will have to deal with a lot of, let's say something that will kill an edge is not necessarily your entries and your stop loss. Sometimes it's the frequency. Sometimes you will not see the setup for a while, and that will be just crazy to you. It will be like, damn, like I used to make so much money with that setup. Price was acting so well, pulled back here, made so much money that year, and then next year, price is not doing the same thing. So you kind of lose edge in that sense. But the quicker you are, the quicker you can see it, and the quicker you can adapt, the more money you're gonna make. I know someone who's trading the same exact strategy as me could be making more money than me if he understands the current market conditions that we're at. Okay, so this is like the kind of the discretion of a trader that you need to have in a sense. Okay, so let's say here, this candle closes bullish, sweeps the previous candle's low, closes back above the opening price as a bullish candle. So here I would treat every shift in market structure as being fake outs. So let's wait here. Okay, this is not a bad long opportunity, I would say, based on that 15 also. So basically what is happening, new candle opened up, we moved down first. Okay, we moved down first below the open. So in order for that candle to be bullish and to close bullish, basically, we need to form the downwick of that future bullish candle. So right now, we're pulling back down towards a good support level, and look at the size of that downwick right now. Okay, what I want to do is not catch the transition between here to here. That would be dumb. I don't know how we're going to react to those PD arrays and to those sellers that actually rejected this high. Okay, what I'm going to do though is that I will catch the transition between this right here that is fluctuating back to the upside all the way to that high or the opening price of that candle. Okay, let's say here. So I will catch just this small move, potentially a 5-minute candle or a 15-minute candle distributing back to the upside. That's the only thing I want to do here. So let's say right there, I go to the 1. We broke structure to the upside aggressively. What's going to be my target? Either this high or this opening price right there. I know these are two huge levels. All right. What is the range? Showing me we shifted below the slow. So we created a nice, basically high, low, higher high, lower low. This is exactly what I want to see. And once this shift is starting to not hold and we're breaking above, I'll enter here aggressively to scalp my way back up inside the range. Okay. So I see we're getting a little bit more and more people here. Make sure to like the stream and subscribe to the channel. I'm doing 250K select account giveaways, which you guys, basically you can, if you want, just DM me and I'm gonna basically send you a growth instead of a select account. But I think people like the select a lot. Sorry. All right. So I'm longing. Why did I put my headphones on? Okay, so I'm gonna be longing this right here. Stop loss will be right below this candle's low. Take profit back at this high. I will potentially put my stop loss to break even once we hit this opening price here. But you see, like the kind of trades I'm taking, I'm always putting my stop loss below some sort of internal lows, always putting my take profit either back at opening prices of candles or at above a certain high. This is how I can basically know the real statistic of my edge. If my edge is just to enter and aim for a point amount, do I truly understand why price is moving from here to here? No. You know, even if I end up losing this trade, I know I can replicate it over the long run, which is exactly what I want to see. So let's do this. You know what, let's do this, all right? Let's make it a little bit bigger. Okay, we're pulled back towards our breaker block here, the bullish breaker block that got created from the squeeze of all those sellers. This 15-minute candle, basically, I'm predicting it. Okay, we swept the previous candles low. We're flipping back above the opening price. I'm predicting that this 15-minute candle will be bullish. Okay, DM you where? Nah, but like if you win the account, bro, like I'm not just gonna send you an account for free. I'm not that guy, bro. All right, nice push. This candle has no downwick. Basically, all right. So it's a pretty good push right now. Pretty confident in that play. Let's see what's gonna happen. Push, pull back, big wick. Nice push back to the opening price of that candle. And here's the take profit, basically. So 75. And we're out. Again. What can you say? Back to back to back to back. Literally back to back to back to back. Literally. What happened inside this range? The same thing. Was I able to catch my piece of the pie? 10, 15, 20 handles inside the futures market? Yes, I was. And that's the only thing you should be worried about. You know? A lot of people are worried about top ticks and bottom ticks. You are worried about the wrong ticks, bro. The wrong ticks. If you're worried about how to make 10, 15 handles consistently in the futures market, this is... And then you add to that system that is basically showing you really good results, then and only then you're gonna be really good at trading. So you need to take, let's say, a system that works really well for a 1-to-1, or let's say 1.5-to-1, and then analyze all the winners, all the losers, and then come up with a potentially a rule of risk management, or a rule to let the rest run back towards, let's say, when there's equal highs, or when the high is formed there, or when it's a news high, data high, I'll let it run for a 1 to 2, a 1 to 3. When let's say you add a rule when Asia chopped, okay, so created a range, London swept the low of Asia and then shifted above Asia high. Okay, let's say this is London, this is Asia, and then in New York session we're pulling back here, and I know it's a good daily profile where we formed the down wick of a bullish daily candle. We're above the opening price, everything is aligning together, daily, 1 hour, 15-minute, and then this 1 hour candle closed bullish and we're pulling back, we're shifting back above this. Potentially you could let it ride for the whole hour, but trying to find 1 to 2s, 1 to 3s, 1 to 4s without having the same exact framework every single day is absolutely brain dead. And I stand on that, and I would debate anyone on that, because that's my view. But show me someone who started with a 1 to 3 and is making consistent money, because I'm still trying to find them. Because statistically, just purely based on statistic, not even edge, if you have a 1 to 3, you have 33% chance of winning your trade. So every single, you're going to win one trade every single time you put on 3. Okay, statistically. So statistically, there's like 2-3% chance of bringing an edge that is 33% all the way to like a 50% and be like extremely profitable with it, let's say. There's slight chances, and like you need a lot of edge, a lot of edge. And what are you going to do in market conditions that don't displace, don't distribute? There is times on the futures market where price is in this, literally. The New York Open is this. What are you going to do those days? Are you going to give back so much money that you didn't make any money the whole month, or the whole year, or the whole, quarter? You tell me. All right. So, beautiful, absolutely beautiful session. Okay, what we went over today was basically a system looking at the first hourly candle of the day, basically having the thesis that on the first 30 minutes of the day, the biggest market participants are positioning themselves, and once that candle closes in a certain direction, let's say closes bullish, then if you take an hourly candle, there is going to be 4 15-minute candles. There is going to be a lot of bullish market structure formed from 10 to 11 because of the fact that the 9 to 10 a.m. candle closed bullish. Okay, there's going to be a lot of resistance at the lows, and basically price is going to be willing to breach higher highs. Okay, that's basically the thesis. So once the new candle opens up, okay, and you see bearish shifts in market structure, which is usually where all the ICT traders sell their shares to predict a reversal in the market just purely based on 1 minute structure. This is, you're not going to enter shorts here, you're not going to enter longs here yet, you're going to wait for them to be shitting their pants, and then when they're shitting their pants and they know they're going to lose the trade, you will go long and you put your stop loss right below this candle's low, stop loss, TP, and this is your entry. And why do I like it so much? Because I know I can replicate it over the long run, I can study it, I can understand that when my losers occur, I could adapt. All of those things come in play. All right, so I'm gonna select the winner right here. All right, guys, I have so much allergies right now. But beautiful session overall, guys. Appreciate y'all so much. We're gonna do the giveaway right now. We're gonna do 250K select accounts. What we're gonna do is a number. All right, we're gonna do a number. I'm gonna type a number in Nick SDMs. Okay. You guys know Nick, the guy who trades with Rebecca in the PM session on Tradeify TV. So I'm gonna type a number. I'm gonna let 1 minute pass on so you guys know it's not rigged, and then once that minute is done, I'll type from which numbers to select from. Let's say I'm gonna go. All right, the number will be from 200 to 300. Let's say split, and you guys type the numbers that you think it is, and the first guy who types the right number gets the account. And I'll show you the proof that I typed the number before I selected the winner. All right, just as proof. So right now it's 8:03. All right, the number will be from. Let me just pull out my phone because those numbers are so fast that sometimes I can't even actually know who's winning or not. Okay, the numbers will be from. All right, so from 800 to 900. Good luck. And it's not from 200 to 300. It's from 800 to 900. Good luck. Okay. Close. Close. Damn. I'm going pretty slow. All right. Killer Viper 4425 is the first winner. I'm gonna show you the proof that you are the winner. He typed 871. Let me just go on Discord right here and show y'all the proof. Wait. So here I typed 871. You guys can see it on the stream. I typed 871 at 6:02 p.m. and right now it's 6:04. So this is the proof that the giveaway is not rigged. All right. So congrats. All right. I'm gonna send you. Make sure to have your email in your YouTube description, my brother. This is the only way for me to send you your account. So then we're gonna do the second giveaway of the 50K select account. I'm gonna do this number right here. All right, we're gonna wait 1 minute because I typed it as 6:05. All right, once it's 6:06, we're gonna do the other account. All right. Let's wait. Let's wait. Let's stay patient. It's gonna turn 6:06, man. It is. It is what it is. 6:06. All right, perfect. So right now, the number will be. I already forgot my number. All right. The number will be from. Wait. Okay, my YouTube stream was lagging. I was like, damn. Okay. The number will be from 500 to 600. Good luck to all of y'all. Come on. You guys should be locked in. All right. Donna H with 543. How do you fucking get it again? This is crazy. I think I already gave away an account to Donna H. 543. Let me show you the exact 543 at I typed it as 6:05. You guys can see it right there. 6:05 p.m. So Donna H, congrats. You won the other account. Um, Damn, that's crazy. That is some that is some goated luck right there. All right, so we're not even at 80 likes, and we're 87 in the chat. Can we get some more likes, guys? Come on. Can we get to 80 likes? All right, guys. So this was the session. I appreciate you guys so much for tuning in. I know it's not easy to tune in on a backtesting stream on Monday night. The New Year's is coming in, and it's, of course, it is hard, but I think it's a really good thing to do, to backtest a lot and to have a lot of data before 2026, so you have full confidence in your system. You know exactly what you're doing, and you're fully aware that the system that you're trading will get you out of your drawdown eventually if you have one, and will give you an amount of money that will satisfy you and that can basically make profits in the futures market, or make profits with Tradeify. So this was it, guys. I appreciate you guys so much. If you have any questions, make sure to DM me. Okay, you guys could join my free community on there's a link in my YouTube channel, Amos PFT. But join and ask any questions that you guys want, and I'll be there to respond to y'all. Appreciate y'all so much, and I see you guys on the next one. Peace out.